Hello traders, Rishi Patel here, co-founder, Master of the Markets, the Elite Traders Conference and the Traders Open Day, and a very warm welcome to our video here on pivot points. So what are pivot points? Pivot points are just areas of support and resistance. Support and resistance, also remember, sometimes also called supply or demand. So these are just levels of support or resistance in the market. So they can act as either support or resistance at any given point. And as the name suggests, they're just pivots in the market. They're points at which we expect price to pivot. So they are, in essence, used as reversal points in the market where we expect to see the price climb, pivot or reverse, and then turn around and go into another direction. Now, this is what they are in essence, but what I really wanted to talk about in this video is why we use them, or why anyone would really use them, and in a nutshell, how to use them afterwards as well, but more why we use them and how they're actually derived, or what actually happens around them for the price to even move around those points. So this is very much the focus and the emphasis on this video. So the first thing to talk about is the different types of traders that there are in the market. So there are three types of traders in the market. So the first one here are your top step brokers. So these are the guys that control the larger money and are able to influence the price movements. Now, generally speaking, these are the guys that are starting the moves off. Now, you've got your top step brokers. The next people into a trade to get price going really is the experienced traders. So then you have your experienced traders coming into the market. Then finally, after the experienced traders are in, after most of the move has taken place, you actually get the newbies coming in. So these are traders with very little experience, or perhaps they have not much experience at all, and they're getting into the move slightly later. So these are your three general categories of traders that are coming into the market at any given time. Now, how does this actually influence the actual movement of the price in between pivot points? So let me give you a drawn out example here. So let's say this is our daily pivot point. So I'm going to label this as daily pivot point here, DPP. And then let's say we have, let's draw up here R1. And for those of you that have looked at pivot points before, you'll know that R1 actually stands for resistance 1, which is actually your first major level of resistance above your daily pivot line. Now, in between the daily pivot point and the R1, generally you have a level called mid R1, which I'm not going to emphasize too much on this video. What I really want to do is show you how these three categories of traders interact with these different price points here. So generally speaking, as I said earlier, this is what happens. So you get your top step brokers coming into the market at around this level. They generally tend to start the move. So let's say your top step brokers come in at this price point just here. They start the move off. And then the move gets going and you get your experienced traders coming into the market a little bit later, just here. So they're able to capitalize some element of the move. Then what happens is the price continues to go up, and this is where you get your newbie traders coming into the market. So your newbies are coming into the market much later on in the actual price move itself. They are buying at these levels just around here. They're actually buying the market. So what they're doing is, of course, they're placing buy orders. Now, if they're placing buy orders up here, of course, you know they must be placing stop orders down here. Then what generally tends to happen is the top step brokers have made the move. They've made their money already. Now what they're looking to do is sell off. So they will start to sell and they will knock out the stops of these newbie traders just here. And so this cycle will continue again. They start the move off. The experienced traders come in. The newbie traders come in towards the end of the move. And this is very much how these three categories of traders actually interact around the pivot points. So this is what I wanted to illustrate to you in this video. It's very much a game of understanding how the price moves and the actual wave itself, where we are in terms of a price wave and phase. This is, of course, something that you can only do as an experienced trader. So, of course, it's about building up your knowledge and getting to that point so you can get in earlier on the move. That's, of course, your goal. Our goal as experienced traders, of course, is to follow what the smart money is doing, these top step brokers are doing, and understand the signals for reversals in the price. So you can see daily pivot point here is acting, if you like, as an element, a level of support. And that level of support is where the price has come in from. The top step brokers have moved this off here. Of course, this would be a good buy point and to put a stop underneath. And that's how you can replicate what these top step brokers are doing just there. So what's a way in which you can use this knowledge? Well, there's lots of ways. Let's give an example. Let me give you an example of taking a move short. So what I could do is, let's say, for example, this was my daily pivot point just here. And let's say this is my R1 in this case. And let's say this is our level of support. So this is S1. So what we could do in a manner of using this as a trading strategy, as a tool to actually complement your trading opportunity for something you can get into, what you can look to do here is you can look to sell at the pivot point. So when the price comes up and bounces off of this pivot point, I would ideally look for this in a downward trend on a higher time frame. Obviously, this is only one tool that you need to use to get into trades. Don't just use this solely. I would never do that. Correlate it with other time frames and build a crib sheet up. We've done lots of video updates, blog updates on how you can build crib sheets and things like that. So do check out the rest of the update videos that we've made on our blog. But certainly, one of the ways you can do this is to sell short at the daily pivot point. So you can sell at the pivot point. What you can do is place a stop here at R1. And so you can have a stop loss in the market just here. So if the price does move up, obviously you have a protective stop above that key level of resistance, but you're expecting, of course, the price to pivot from the pivot point, hence the name. It's a level of resistance in this case. And you're looking to then potentially put in a target order at your first level of support. And this is where you could take your money off the table. So this is one way, of course, in which you can use pivot points. As I said, do combine this with other methods of using other tools such as time frame correlations, whatever it is you're looking at, price action patterns, fundamental analysis, whatever it is, use your crib sheet tools to actually complement this with other techniques. Don't just use this solely. But that's pretty much it from me for this update. So thank you very much for tuning in. Once again, Rishi Patel, co-founder, Master of the Markets, the Elite Traders Conference, and the Trades Open Day. As we always say, until the next time, stay disciplined. Follow your plan and trade like a master. Bye for now.